Hey everybody, good morning. It's about 8:46 in the morning on the last day of August 2022. What I'm going to do is just give an update on the S&P 500. A few things happened yesterday and I want to talk about that before we get into any of it. Of course, as you know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. So yesterday we had some interesting price action, which is really in line with what we were expecting. Let's go ahead and move on into the charts. So what I was discussing yesterday morning, if you didn't see that update video, you can go back to the channel. You can get all that information on there. But what I was discussing is the fact that we were going to see a pullback to around the 4,000 level. I was talking about, somewhere between like 39.80 to 4,000, we're probably going to see a little bit of a bottom. And that's evidenced by this, which really has not changed. Let me just roll down to a 3-minute time frame. I know things look a little squiggly here, but right here is where we were at when I published my video, and I said we're going to drop down to this area, and then we were probably going to see support there, and that's exactly what we have seen. I think what a lot of people were waiting for was a just a continuation to the downside. And the reason why I feel like it's important to to put out a video like this is so last Friday we saw accelerated selling. We saw a big red day, and I think that that's something that you can't deny. We saw basically a minus 4% day for the S&P 500. That's a pretty big deal to have a 4% down day. I think that is something that that we will see again in the future. But let's just talk about yesterday, where yesterday we did see kind of a significant move to the downside. We were up at about 4,060, 4,070. And from there, from the top to the bottom, we still saw a 2.66% day. But I think the key here is it didn't go down as much as it did on Friday. So I think that's important. That's important to realize and important to understand, because that means that selling is subsiding. And even if you were to look at volume, I don't have volume on here. Let's just go ahead and throw volume on this chart, and just so we can take a look at this. Let's just take a look at the intraday session. All right, so here we had kind of an increasing volume. And then, of course, through the middle of the day, kind of subsided. Then at the very end of the day, increased selling, a lot of selling. Now, if you go back here and take a look at yesterday's price action, there was a lot of volume, basically all morning, to pull this price down. But again, it didn't go down as much. So what does that mean? So volume just means shares bought, shares sold. Well, if there's more volume than there was on Friday, that means you have a lot of demand in this area that's not allowing the price to go down. In order for the price to fall at a rapid rate, you need to have a lack of buyers. The fact that there is a lot of volume, more volume than Friday, but yet the price didn't go down as much as it did on Friday, I mean, you can really only deduce that we have more buying than we have selling. And I think that is really, really important to understand. Okay, so let me just go ahead and remove this, and let's just look at this here for just a moment. All right, so we know that on Friday, red candle, red, all the way here, we had just a little bit of a green candle, but look at the low volume on that green candle. And then, continued to be red the rest of the day. But now let's take a look at yesterday, because I think this is important to understand, right? A lot of volume, but it didn't go down. We have these 3 high volume candles here, and it went down a significant amount. Here in these 3 high volume candles, it went down, but it didn't go down as much. You have an increased amount of buyers. Then look at this candle. This is the one, the 11 o'clock, it's not the 11 o'clock hour. I'm on the 30-minute candle here. But on this particular candle, you had a green candle, you had a lot of volume, and it didn't really go down. It didn't really move around much at all. That is price acceptance. There is a heavy amount of support in that area. So what does that mean? So I just finished saying that, we had a 4% down day. We had a 2% down day. That is a theme that is going to continue. But if you're trying to short the market down here, you're asking for yourself basically to, to lose that money. You're basically giving that money to somebody else that is, is, I don't want to say smarter. That's not an appropriate word to use, but somebody that maybe understands the market just a little bit better. Can we continue to move down? Certainly we can. For bulls, we talked about this, that 39.50 level is really important for bulls to maintain. Once we violate that, and I do think we will, then I think that bull case is basically going to be over. But right now, we've already dropped a significant amount from even the top. So let's just go ahead and measure from the top down here to the bottom. I mean, we've dropped 8.38%. I think chances are really, really good that we're actually going to see a rally. And we talked about this yesterday. I said once we got down here to these levels, we're likely going to see a rally, and it's going to go in an ABC form. We'll have to wait and see how it resolves to make a determination on where we go from there. Okay, so you can only predict the future so much on shorter time frames. Longer time frame, super bearish. But we're talking years. We're not really talking like months here. Certainly we can get a crash into Christmas like we saw in 2018. But, between now and then, a lot is going to happen. And really, in a bear market, the majority of the people that lose money are bears, because you have these suckers rallies that occur frequently. And I mean, I would say that this is probably a great example of a suckers rally. Right? We had a significant move to the downside. People were buying puts down here. We had a move to the upside. People got squeezed out of their position right here. And then we had the final move down. What you should be looking for, if you're bearish, you should be looking to short the rallies. You shouldn't be looking to short a drop. That is not great. Now, certainly that probably did work right here if you were able to hold on to it long enough and you bought enough time on those. Like certainly if you're trading futures, we're in the middle of the September expiration, so there's still a lot of time there. But fact of the matter is, we had a grind and a move up. Probably you had people that were getting squeezed out of their positions, and then finally we had that move down yesterday, right? But now, here we are, we're finding that support at 4,000. It got a little bit deeper than I really expected it to go, which means it's probably not going to go up as high as I'm expecting it to go. I'm expecting it moved up to at least 4,100. I would caution getting super bearish down here, and if you do, make sure you buy time, and make sure you're willing to, to take some drawdown on that position. Because, again, let me just go ahead and close the volume on here and just take a look at this. I'm going to go to an hourly time frame. If we take a measurement on this from the top all the way down here to the bottom and move it on over, I'm expecting there to be some resistance at the 382. So if we bottomed, right, resistance right there at the 382, probably going to ping pong between the 382 and the 236. So that's going to be probably about what we see for an A and a B. Then we're going to see that C wave up. Is it going to stop at 41.46, 41.50? Very likely. Is it going to go all the way up to 41.88? It's possible. It's possible. The 50 or the 618, that's what you're going to be looking for if you're a bear, and I'm a bear, so that's what I'm looking for. Does that mean I'm short right now? No, I'm long right now. And a lot of people on the server are long right now. And, we were layering into longs below 4,000. So now here we are, S&P 500, we've got about 35 minutes till the market opens. We're over 4,000 right now. The SPX index and the ES futures are pretty much almost equal right now. We're getting close to the September expiration, so the price of the futures is going to get closer and closer to the price of the underlying index. It's you really only have a wide spread between the futures and the underlying index at the beginning of a contract roll versus at the end when you're getting closer to expiration. Just for your information, the September futures are going to roll here in a couple weeks, so just keep that in mind. we're going to go from ESU22 to ESZ22. So we're going to be moving to the end. It's HMUZ. Those are the four main contracts that are used when you're trading futures. And so more than likely, when we get to that roll is probably going to be well after we reach these highs and we start to roll over. And I think that Z22 is where we're going to see that big drop. So just kind of keep that in mind as the Z22 futures start to trade regularly. So this is my path on the S&P 500. I felt that it was important to bring this up, to talk about this. We're discussing this on the Discord, so getting this all out there in the open, I think, is wise. All right, guys. If you're a fan of losing money, don't subscribe to the channel. But if you want to continue to receive some actionable information and have some kind of a path to financial freedom, make sure you hit that subscribe button. And while you're at it, join our Discord trading room where we discuss market movements regularly and trade ideas that are posted every single day. And of course, wherever you are in the world, I hope you're having a good day, a good night, and a good evening. Take care, everyone.